Good morning, this is Butch, Sharrock Options University. It's Friday, September 14th, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profits, and as always, do not trade with money that you cannot afford to lose. Let's take a look at the week that was, and if we want to look at the week, we only need to look at one thing. FOMC meeting begins on Wednesday and announces on Thursday at 12:30. Profound effect that it had on the market is what we really need to talk about for news as we so far look into the week. Other things that took place during the week really didn't have much influence. Job list claims disappointed. PPI disappointed. These are usually big news movers, but it didn't mean anything compared to Mr. Bernanke, who said that he was going to change the world that we live in, and he was going to do it by printing more money. He's going to do it by trying to get this economy to move and create jobs. While I must agree with him that creating jobs is what it's all about, production is what it's all about, producing is what it's all about, but pumping money into the economy, someone will pay for this somewhere along the way. He must think that he needs to do something that isn't being done by government anyplace else, and that is the position that the Fed takes. How will this be handled? Well, we will see that it had a huge move on the market. Friday, we're looking at CPI in the morning. We're looking at consumer sentiment. We're looking at business inventories. We're looking at industrial production. We're looking at retail sales. We shall see what kind of effect they have on the overall market as we move forward during this week. Friday could be an interesting day in the market because what we saw was a complete breakout. We have been in an uptrend. We were in an upcycle and an uptrend the last couple days. We were consolidating from the big move that took place last Thursday on economic news. And we see that we have a breakout into new highs. So the S&P has broken out. Has it gone too far, too fast? Are we overbought? You bet we are. How far will we continue to go? Hard to say. You do not fight the Feds. So this is a very dangerous time to be trading in the market. How far will it go? 1480, 1490 as we're entering into multi-year highs in the S&P and 12-year multi-year highs in the NASDAQ. Taking a look at the week a little bit closer, as we look at it, we see that the first 4 days consolidated after that big move last week, and then today with our news announcement from Bernanke, it only knew one direction, and that direction was up. We broke out of our previous trading zone, that diagonal line that we had drawn there. We were trading between that and the 30-day moving average, and as you see, we have a breakout. How far will we continue to go? Well, that remains to be seen. Look for higher highs, higher lows, or lower highs, lower lows after the opening this morning. It appears that we will be opening big, opening up, should get a new high and a higher high today. Now the question is, will they sell the news, or will this continue right on up into 1480, 1490? The Dow did exactly the same thing, finally broke out of its previous trading range and into new highs. Not the same kind of volume in the Dow that we saw in the S&P. Looking at the NASDAQ, we see that the NASDAQ certainly did break up, and NASDAQ at 12-year highs has certainly shown a big move this summer since last June, and is the overall market leader for the year, as it's up the highest percentage for the year. Looking at the Russell 2000, we see that it did break out of that previous zone and has moved up very briskly, very nicely, in order for the NASDAQ to end up in positive numbers for the month, which it many times will do in this month of September, which is usually the worst month of the year. We see that we're at it can stay above 820 and still be in positive numbers for the month of September, which so far has been nothing but a bullish month. That was last week's, in fact, let's take another look at that. Looking at the beginning of the week, how far the markets have moved. This was as of last Friday. We see all of them are in positive numbers. The Dow up 9% for the year. The NASDAQ up 20%. S&P up 14%. And the Russell up 13.7% as we see big moves in the market for the year as we're in multi-year highs in many of our indices. So how far are we going to go? Time will tell. Watch for higher highs, higher lows. Trade with the trend. Currently, the trend is up. All right. VIX, well, we did exactly what we expected to, pulling back. The fear comes out of the market as the market goes up, and that's exactly what the VIX is doing. Notice it's getting down to that very low extreme numbers again. Looking at the sector of the bonds pulled back as the market went up, very near that 200-day moving average for bonds. Look for a bounce out of the bonds if the market does pull back from this new high. If the news is sold, expect money to go into the safety of bonds. Looking at the financials, the XLF, the ETF for our sector of financials, we see that we're a long way away from the moving average. Certainly has moved up, and money into the market certainly does help the financials and that entire sector do better. Looking at the oil, we see that we are at a 3-month high as oil has climbed up, and I'm sure you can see it at the gas pump in your own home. Gold had a huge move up. As we got the Fed announcement, gold went up and headed for 3-month highs and headed for its highs of the year. And there was a certain number of people that headed for this safety haven with a bit of volume as gold had a huge day yesterday in the overall market. What kind of volume did we have yesterday with this uptrend? Technically, that tells us we had a lot of strength. As Bernanke said, I am going to make this economy move. So with that, we had quite a week as Bernanke and the Fed began QE3, that which we've been looking for a long time. Will he be accused of influencing the overall election? You bet. I'm already seeing it come through my email box. And it will have an influence on the election, and we will see what that influence will be as history is being written as we increase money supply, increase the amount of money available, huge amount of money every month into the market from Mr. Bernanke. So with that, we'll look at our stocks to watch, see how our horsemen did during this huge announcement out of the Fed. And this is Butch Shorak, Options University. It's Friday, September 14th, 2012, and thank you for being here. Gold members, stick around. We'll look at the rest of the story.